Hello friends, welcome to Concept. My name is Dharmendra. Today I am going to talk about good trades versus bad trades. Okay, so it is very important to understand what are the good trades and what are the bad trades, because on the basis of that you will forecast your earning, you will forecast your trade setup, you will forecast what kind of trade you should do and what are the things, what are the mistakes which you should avoid. Okay. So let's discuss what are the good trades and what are the bad trades, and also I will show you the chart. Then afterwards I will show you what are the things which you need to keep in your mind while taking the trade. Okay. So good trades versus bad trades. Okay. So let me go here. Good trades versus bad trades. Okay. Now, while taking the good trades, okay, if I am talking about good trades, that means I have thoroughly studied that particular strategy. Okay, that particular strategy. That means I have built up a strategy. That is a good trade. So here, first thing comes up in good trade is about the strategy. Okay, while the bad trades, it's never been about the strategy. Okay, whenever I'll go for the bad trades, now when it comes to bad trades, okay, in bad trades there is no specific strategy. Okay, whenever I am going to take the trade, I will take the trade on the basis of tips, on the basis of tips. All right, even if I've selected the strategy, I have not back tested it yet. Okay, that means whatever the strategy I am going to take, I am going to pick up that particular strategy from the market, but I haven't tested it yet, and straight away if I am going to deploy it, okay, and use it to trade into the stock market, that will be a worst decision for taking the trades. Okay, so usually bad trades take on the tips and also untested strategy. Okay. Now, good trades will have well defined loss. Okay, that means well defined loss, you can say also SL. Okay, that means a better stop loss or better loss definition. Okay, in bad trades you won't find that kind of things. Okay, whenever we are going to take the bad trades, here usually people exit from that particular position whenever they want to exit. Okay, so it depends on mindset, or you can see impulsive decision, impulsive behavior. So let's just say if I am going to take the trade, okay, and I kept my stop loss, let's just say at 1%, 2%, whatever is my risk capacity, okay, that will be my good trade. But for a bad trades, they usually exit from that particular position whenever they feel it is right. Okay, it is nothing on the basis of the risk management, it is nothing on the basis of strategy. They usually exit from there from their point of view. Let's just say if I am taking the trade at 51,000, okay, bank nifty, okay, and it is coming down, I am bullish in my view, and it is coming down like 50,900, 50,800, 700, and I am just hoping it will bounce back, without knowing the data, without knowing the strategy. Okay, I'll make huge losses. Okay, so it's all depend upon their mindset and impulsive behavior. Okay, now good trades have risk reward ratio, and in bad trades they have greed. Okay, they don't have risk reward ratio, they have greed. That means if I am keeping a stop loss, let's just say 50 points down, okay, and here I am going to take the trade on the basis of 1:2 ratio. That means I am going to book my profit at 100 points above. Okay, but in greed, okay, people usually don't book profit at 1:1, 1:2, 1:3. They think that it might go beyond this level. Okay, beyond this level and I want to book more profit. Okay, let's just say if they are making profit of 20,000, but they are keeping in their mind, okay, I want to book 1 lakh. Okay, so they just keep holding that particular position without understanding the concept that the risk reward ratio is very much crucial while taking the trade. Okay, so here they work on the greed. Okay, now strategy, well defined stop loss, okay, risk reward. Then here I am going to talk about position sizing. Position sizing. Okay, so as a good trades, okay, as a good trader, if I want to go with the intraday strategy or maybe any swing trading, okay, so I'll definitely look at the position sizing, because let's just say I have like 2 lakh rupees, okay, and if I am going to invest in bank nifty, okay, as a naked option buyer also, I am not going to deploy my whole capital, I am not going to invest my whole capital. What people usually do as a bad trade, they usually invest their whole capital. Okay, huge quantity, like more than 70% of the capital. Okay, that is the worst mistake. Okay, because see, while taking the trade, okay, without knowing the risk management, if I am going to invest like more than 1,50,000, 1,60,000 in the trade, okay, let's just say the strategy didn't work according to my forecasting, my prediction, so I'll face losses. So here, if you are increasing your position sizing, if you are increasing the lot, the loss will be huge. Okay, so I should purchase the lot, okay, purchase the lots as according to my risk bearing capacity, according to my loss bearing capacity, that this much loss I can bear. Okay, so that is the mindset, okay, here. So usually people go with the position sizing, and as a bad trader they don't go with the position sizing thing. Okay, so usually they make huge losses because of this. Okay, so let's go to the chart. Okay, I'll explain you how, according to the technical concept, how I can place the stop loss. Okay, so if I'll go to charts, okay, now here I can see the nifty is moving beyond. Okay, so let's just say if I'm taking the trade according to okay, resistance breakout. Okay, here I can see there is a resistance breakout, all right, and here also you can see it is just moving like this. Okay, so this is the resistance breakout, all right. So if I am marking my resistance over here, okay, and even if you are marking your resistance over here and there is a breakout, all right, there is a breakout. Okay, so just keeping in your mind, okay, whenever there is a breakout, okay, let's just say I am going to take the trade over here, this is the breakout. Okay, now the condition is favorable to me, all right, there is a breakout and I can see in the order book the buyer initiated quantity is more as compared to seller initiated quantity. So that means the buyers are more dominant. So if I am going to buy nifty over here, okay, buy nifty over here, so first most important thing is what will be my stop loss. Okay, I need to find the latest swing level over here. Okay, and this much only loss I can bear, so I will take this trade. If let's just say the swing level is much below this particular level, okay, let's just say here I can see if I am going to buy this stock over here, now I want to keep my stop loss over here. Okay, this is my stop loss, all right. So this is around 112 points. Okay, 112 points is a stop loss. Okay, so okay, I can manage 112 points. Okay, let's just say if I am going to buy one lot, so it means my losses will be around 3,000 rupees. Okay, now if I want to take the trade, my risk reward should be at least 1:2. Okay, 1:2. So here you can see I got 200 points. All right. So if I am going to take the trade, this trade, I'll strictly keep my stop loss at this level. Now, if the stop loss is like 200, 300 points, okay, so it is nifty. Okay, you should always check that particular skip in which you are going to take the trade. Nifty will not give you 400 points in one day or in 2 days. Okay, not every time. Okay, if you are lucky, then only it will give you. So first thing you keep in your mind that what is the script, what is the volatility of that particular script, how much points it can give in 1 or 2 days. Okay, So if my stop loss is beyond like 150 point, 200 point, I won't go with that trade. Okay, that is how you are going to analyze the script. That is how you are going to take the trade, by managing your risk, by managing the risk reward ratio. Okay, now here also you can see the Nifty has breached the highest level. Okay, now here also if I am going to take the trade, will I go with higher lots, means more lots? No, I will not. Okay, so here, because I don't know where is the resistance right now. Okay, only according to the open interest I will check the resistance and place my trade. Okay, so here I don't know the where is the resistance according to the technical concept. All right, so I will go with 1 or 2 lots if I am a new trader. Even if I am a like intermediate trader, I will go with the 1 or 2 lots. Okay, so this is how you are going to analyze the Nifty. This is how you are going to be a good trader. Okay, now I want to discuss with you some points. Okay, so what are the aspects, what are the characteristics of the good traders and bad traders? So let us discuss. Okay, so here now, so good trades versus bad trades. Okay, so just pay attention to it. Now here, a good trade is taken with a complete confidence and follow your trading method. A bad trade is taken on an opinion. Okay, as I've explained. Okay, you should follow your trading setup. Okay, here complete confidence and follows your trading method. Whatever the method you are adopted, according to that you should follow. You should not go with an opinion on any other opinion. Okay, you should have confidence in your methodology. Okay, now here a good trade is taken with discipline, entry and position size. Okay, discipline entry, this is the price at which I want to buy that particular script, so you should buy at that price only. Okay, and you should maintain your position size. A bad trade is taken to win back losses the market owes you. Many people, they have made huge losses, so what they do, next time they bring more money and they buy huge quantity, and in that way they make more losses as compared to their earlier losses. Okay, now a good trade is taken when your entry parameters line up. Okay, so entry parameters, what are the parameters? I have explained it to you. Okay, earlier I have explained it to you about the strategy. I have explained to you about the script selection. Okay, if the particular script is according to it is good volatile. Okay, and also the average true range. Okay, whatever that range it is giving you. Okay, if you are satisfied with that range, okay, this much point it can move in a particular day, you should keep that thing in your mind, and according to that parameters also you can see whether it is able to give you 1:2 ratio or not, whether you are able to identify your risk parameter, whether you are able to identify whether you can place stop loss according to the latest swing or not. Okay, if you don't find any latest swing, don't take that trade. If you don't find any breakout, okay, if you don't find any breakout according to the technicals, according to the data, you should not go ahead with that trade. Okay, so you should always look for your entry parameters line up. If everything, whatever the setup you have made, if everything is in line, then only you can go ahead with that trade. Okay, a bad trade is taken out of fear of missing a move. Okay, that is fear of missing out, FOMO. Okay, so most of the people, what they do, whenever there is a breakout, okay, they just miss the trade. Okay, and when it is like making higher high or lower low, okay, they think that I should catch this move. Okay, it might go further and I'll make huge profit, but that is a big mistake, because most of the time it is near to the resistance or near to the support and it bounces back from that particular level and they make huge losses. Okay, so here a bad trade is taken out of fear of missing a move. You should not do that. Okay, when the trade is you can see the trade is out of your reach, the trade is already completed, or maybe already you missed out that trade. Okay, you should exit, you should wait for next opportunity. Okay, just let it go. All right, now a good trade is taken to be profitable in context of your trading plan. Whatever the trading plan you have made, whatever the risk reward ratio is there, according to the trading plan you should make your profit. So let's just say if I am buying one lot and according to that I will get 5,000 rupees according to my setup, I will go with that plan only. Okay, I will go with that plan only. A bad trade is taken out of greed. I should not wait for more to get like instead of 5,000 I should get 50,000. Okay, many of the traders do that. Okay, when they buy some option or buy some futures, even if they are getting some 10,000 rupees or 15-20,000 rupees, they will not book the profit. They think I will get greater returns. Okay, and the price moves down, because one thing you should keep in your mind, market is dynamic. It doesn't move according to anyone's will. It moves according to demand and supply. All right. So here the bad trade is taken out of greed. A good trade is based on your trading plan. A bad trade is based on emotions and beliefs. Okay, like my plan, whatever the setup is there, okay, it comes into it, I will take the trade. It is not according to my belief that, you know, sometimes people what they do, market is going down like this, and they say okay, this is the lowest point it has made, now it can bounce back from here, and they buy that particular script from there, and it went down, it moves on further. Okay, that is how they are going to make the loss, that is how they make losses. Okay, so bad trades is always based on emotions. Okay, is always based on emotions. All right, so you should avoid that. Okay, the bad trade is always based on emotion. You should avoid emotion trading. Okay, trade on your emotions and beliefs. All right, now a good trade is based on your personal edge. Whatever your personal expectation, it should be realistic. It should be realistic. Okay, a bad trade is based on your opinion. Okay, so whatever the personal edge is there, whatever the back testing you have done, it should be according to that. It shouldn't be according to the opinion. All right, a good trade it made using your own time frame. Okay, let's just say if I am comfortable in 5-minute time frame or 3-minute time frame or 1-minute time frame, I should go ahead with that. I should go ahead. Let's just say for intraday I use only 3-minute time frame. For positional trading I go ahead with the 15-minute time frame. Many people go ahead with the one hour time frame. Many people go ahead with a 1-day time frame. They should go for that. For investment purpose I go with 1 week time frame. Okay, what that is me. Okay, that is my perception, that is my trading plan, and I strictly adhere to that. Okay, I don't change my time frame just to few days once back. I don't change my time frame. Okay, I just look where I was wrong, and according to that I take the trade. Okay, so a bad trade changes time frame due to a loss. Whenever they make losses, they change the time frame. Okay, a good trade is made in reaction to the current price reality. A bad trade is made based on the personal judgment. Whatever the price reality is going on right now, okay, real time price, okay, a good trade is happen on that. That is known as price action technique. Okay, according to that they take the trade, not on the personal judgment. Okay, some people think this particular script is just lying down here, it is the lowest point, you should take the trade. No, we should not do that. Okay, wait for the price action, wait for the setup, and according to that you can take the trade. Okay, a good trade is made after identifying and trading with the trend. Very important point. Okay, without analyzing the trend I will not go ahead with the trade, because with the trend I will make the profit. I cannot fight the trend. As I am saying, as I have said earlier, we are not the market doesn't move according to our will. It moves according to the demand and supply concept. Okay, so bad trade fights the trend. Okay, it is going down, they think I will buy it over here, and market bounces toward upside. It doesn't happen. Okay, if it is moving up, they sell the stock, they think it will go down, it doesn't happen. Okay, so don't fight the trend. All right, a good trade it makes using the trading vehicle you are an expert in. A bad trade is when you trade unfamiliar market. That means you must understand the market first. Don't directly jump into the derivatives market, don't directly jump into the currency market or crypto market without understanding how it works. Okay, so you should understand how market works, make it your vehicle and ride it. Okay, that is how you are going to become an expert in that. That is how you are going to make profit in that. Okay, a bad trade is when you trade unfamiliar market. Many people doesn't know how derivatives work, but they think it is cheap. They think options are cheap. They think buying the future will give you much profit, they just enter into the market and they make huge losses. Okay, so don't trade into unfamiliar market, always understand how market functions. Okay, now there are some codes which I need to follow, which you need to follow. Okay, so here are the codes. First one, good trades are made by managing the mind, ego and emotions. Okay, and the good trades are just one trade inside a robust methodology that gives the trader an advantage in the long term. Okay, a robust methodology. Whatever the setup you have made, you should adhere to it strictly, and it will give you an edge over other traders in a long run. Okay, now good trades are always managing risks to keep the trader in the game. Okay, always manage your risks, always keep in your mind that this much loss I can bear, okay, and this much profit I can achieve. Okay, that is your risk management. Only following the risk management you will be staying in the game, otherwise you will be out of the game. Okay, so I hope you like the session. Okay, good trades versus bad trades. Okay, if you like the session, if you like this video, please like and share. Okay, if you have any doubts regarding the concept tool, because it will give you an edge over other tools, because it provides you option and future data to analyze the stock, to analyze the trends. Okay, and you can use it to improve your trading skill, improve your trading journey, and to build up a strategy. All right, if you have any doubts, you can call on the number mentioned above. This is Dharmendra Rajbhar. Thank you very much.